Hey, my name is Kyle. I'm a certified mortgage advisor, and welcome to your ultimate first-time homebuyer's guide. In this guide, I'm going to walk you through everything that you need to know to go from renting to buying your first home. So by the end of this video, you're going to feel really confident about knowing exactly what's going to happen during the process. And my goal for you is that the more that you know, the more knowledge that you have, the more confident, clear, and wise decisions you'll make through the buying process, because it can be really overwhelming. And if you've already just started dipping your toe in the water of looking to buy a house, you already have felt the frustration that may come, or the confusion, or just how overwhelming it can feel to jump into the market. And I want you to feel confident in this process. So first, the thing that we need to begin with is planning your money. We need to figure out what your budget is like and how much you want to spend here. Okay, so the typical home buying process is going to take about 30 days. Okay. So planning ahead is going to make things so much smoother. What I see happen so often is people are like, yeah, we're going to buy a house in 6 months. They do no work, and then all of a sudden they start looking at homes, and then next week they're like, this is the home that we want. We need to buy this, but they're not prepared to buy that home. And so what I want you to do is start planning now. That way, when you find that home that you love, you're going to be able to make an offer on it and move forward without feeling like things are chaotic and you're rushing to get things done and you don't know what the budget's like, you don't know what the upfront cost is like, you don't know where money is coming from. That all can feel so overwhelming, and I don't want that to happen to you. Now, first, a lender is not a financial planner. So many people rely on their loan officer for them to figure out exactly what's going on in your budget. But a loan officer is going to tell you what you can afford based on loan guidelines, but only you can decide what's right for your budget. So often a loan officer is going to approve you for your max budget because you want to be able to see what the range is, how much of a loan that you can get, but they are not your personal financial planner. You're the only one who can decide what's comfortable for your budget there, okay? You're also going to determine your budget in two key areas that we're going to walk through: the monthly cost and the upfront cost. So monthly cost is going to be things like your mortgage payment, property taxes, homeowner's insurance, things like that. Upfront costs are going to be your down payment and closing costs, which we'll talk through. Okay, now to estimate how much you can afford, we can use the max purchase price calculator. You can go to winthehouseyoulove.com/max price to use this. So the reason that I made the max purchase price calculator is so that you can plug in your own scenario. So you can come through here and put in what your yearly gross income is, along with the minimum monthly debt payments. And what this calculator will do is it will run the same formulas loan officers use to see how much of a loan you could get approved for. So up here in the top, I have a conservative recommendation, but it will also show you all the different levels based on different loan types of how much you could get approved for with the purchase price. It shows the down payment, the monthly payment as well, along with a percentage of your net income. And then also it will walk you through estimating other costs like utilities, maintenance. It's going to estimate taxes, insurance, mortgage insurance, things like that. It will also show you example closing costs, different offer strategies that you can use. And then it runs through all of the math that loan officers use. And also will then go into show you other affordability theories that people will talk about. For instance, this will show you this is what Dave Ramsey thinks you could afford. There's also other theories like a qualified mortgage, the 30-33 that a lot of personal financial gurus use, and a 2-6 ratio. So this calculator will give you a really good head start. If you're like, hey, I just want to plug in some numbers and play around and see what this could look like, I would suggest using that as a good jumping off point. All right, let's start with our monthly costs first. So a solid guideline here is keeping your housing costs, so your mortgage payment, which is going to be principal, interest, taxes, insurance, and also any HOA fees. So we have those all listed here. This is what's going to be included in that mortgage payment. The goal is for that to be under 30% of your gross income. So that's your before tax income. Now, of course, you can change this number if you're buying in a really competitive high cost areas. Let's say you're buying in Nashville. It's very likely that you're not going to be able to hit that 30% number. You're probably going to have to go higher than that, or at least most people are going to have to go higher than that. This is not a super strict rule. It's more of if you're under 30%, it's probably going to be, your budget's not going to have a ton of strain on it. I think when you go above 30% is where you're going to start to see some strain. And so it's just something that I want you to be cautious of. It doesn't mean that it's wrong. It doesn't mean that you're making a bad decision. It just means that it's something you need to be mindful of. And I think 30% is a really good target goal to begin considering. That might work in your market. It might not work in your market, and that's okay. It's just a general rule that we can use. So for instance, if we took a look at an example, if you earned $6,000 per month, and that would be before taxes, you would aim for an $1,800 per month or less mortgage payment. Okay. And again, this may or may not work in your market. That's just kind of the goal that we want to work through here. I think if you're going to go above that 30%, you really need to start laying out your budget on paper and making sure that buying a home is not going to interfere with your plans for retirement, for paying down debt, for having an emergency fund, for maybe paying for things for your kids or saving for college for your kids. You want to make sure it's not getting in the way of your other financial goals there. Now, for the upfront costs, this is where things start to get a little bit confusing, I think, for a lot of people when they're buying a house, because often what most people think about with buying a house is the down payment. And the down payment alone feels overwhelming to save for, but there's also closing costs. So let's walk through this. So the down payment is going to vary by the loan type that you get. Okay, so there's going to be 4 main types of loans that you're going to be looking at. And you don't have to know all the ins and outs. On this channel, I have tons of deep dive guides on all these different types of loans, but your loan officer's job is to help you understand these and to figure out the best one for you. In our team at NFM Lending, we can help guide you through what's going to be the best loan for you. You can go to winthehouseyoulove.com to talk with a loan officer on our team if you're ready to do that. So the 4 main types of loans are going to be a conventional loan, FHA, USDA, and VA. Okay, so starting with conventional has a minimum 620 credit score, and it's going to have a minimum of 3% down for most first-time homebuyers. Now, FHA is going to be more flexible with credit, and so if you have a 580 and above credit score, you can do 3.5% down. FHA will actually allow you to go down to a 500 credit score, but you have to put 10% down. Okay, USDA and VA both are 0% down loans, so no down payment there. However, USDA is only for rural areas, so it can be a little bit tougher to qualify for. There's also some income limits there. VA loans are only for veterans who are eligible for a VA loan. So that it's kind of a little bit of a harder box to qualify for, but it does have 0% down. Now, closing costs are going to be things like you're going to have an appraisal on the home to make sure that what you're buying the home for. If you're buying it for $300,000, an appraiser is verifying that it's worth $300,000. You also might have property taxes and homeowners insurance and an escrow account that you have to pay for. You might have transfer taxes. You're going to have title fees. So a title company is going to do a search of the title of your home to make sure that when you buy the home, you're the sole owner and there's going to be no other people contesting for the ownership of your home. So all of these other different things are included when you buy a house. Even if you bought a home in cash, you're going to have closing costs. Okay, they're not just things that the lender charges. They're all of the other third parties helping you buy this home. That's what closing costs are. What you want to expect is around 2 to 4% of the purchase price. So you can talk with your loan officer to get a more detailed estimate of your closing costs so that you can plan for when you're going to buy your home. So when we're looking at upfront costs, the main thing that we're first looking at is, okay, we have the down payment. So let's say we're looking at a conventional loan, 3%. So if you're buying a $300,000 home, that's going to be a $9,000 down payment. And then closing costs, we're going to estimate around, let's say, 2% of that purchase price. But what you can actually do is you can actually have the seller pay a portion of your closing costs. So you could actually say, hey, seller, could you pay 2% of the purchase price towards our closing costs to help cover those? And so that's absolutely a strategy you can use. What you want to do is talk with your loan officer to get an estimate of what that figure is going to be, how much money you're going to need to bring to closing. And then from there, you can see, okay, well, this is how much we have in savings now. This is where we need to be. And then come up with a savings plan to get you there in however long that's going to take you. Now, next, I want you to know your why. Be crystal clear here on why you're buying. And this is going to help you make focused and smart financial choices. So often I see people, they're like, I want to buy a house. And you start digging through and it's, well, okay, you're wanting to buy a house because you see everyone else buying a house. Everyone else your age is buying a house, or you're seeing people post on Instagram that they're buying a house, and it starts to feel like, wait, should I be buying a house? That's really not a super great why to do it just because other people are doing it. There are very great reasons to buy a house, but you have to solidify, why are you buying a house? Are you buying because you're planning on your family growing and you need more space? Or do you want the flexibility and control that comes with owning your place instead of renting? Or do you want to use it as a tool to help you build equity and appreciation in that home so that you can move into your dream home in the future, or that so you can begin using it to build equity for long-term net worth growth? There's so many reasons to buy a house, but I want you to really solidify why you're doing this. And so in this video, you're going to see this Google Drive icon. And when you see this, what I want you to do is I want you to go to Google and just drive.google.com, create a folder that's going to contain all of your home buying documents. So you're going to centralize everything into one spot. And so what I want you to do is just open up a document and start typing out your why. Why are you buying a home? And so this would be a really good exercise to do. If you're buying on your own, you can do this. If you're buying with a partner, you can do this as well. And I think it'd be really good for you to start narrowing down, why exactly are you purchasing a home? That way you don't get swept up in the emotion of seeing other people buy, or you see, you're putting offers in on a home and you see home buyers competing and putting $10,000, $20,000, $30,000 over the list price of the home. That way you don't start raising your budget in a crazy way, or you start adding on you see all these nicer homes, and we really start to see this this desire inflation start to creep up, where we want the nicer and nicer home as we see them. Really narrow that why down and make sure that you have it available to you when you're searching. So maybe you pull that up before you open Zillow, just to narrow down to this is why we're buying. That way you don't get swayed in different directions. So the next step here is you want to get pre-approved for a mortgage. And so why this matters is because it's going to help you confirm that you can qualify for a loan, and then to know how much you're approved to borrow. Okay, so often what happens is people start searching for homes, or they'll go to open houses, and they don't even know if they can actually get a mortgage. And I see this a lot, honestly, where people will come and I'll talk to them, and they'll say, we've been searching for a home for months, and we finally found the home that we really want to buy, and we'd love to get pre-approved. And then we go through an application and realize oh, maybe your credit's not in the spot to be able to buy a house right now. And so for them, that's a lot of wasted time, and I don't want that to happen to you. So it's actually easier to get pre-approved up front to make sure that you can qualify for a loan. And if you can't, that doesn't mean anything about you. All that happens, you're not going to get shamed in the pre-approval process. All that's going to happen is your loan officer is going to say, hey, this is what's not working. Here's what you need to work on to be able to qualify for a mortgage. That's all that happens in that pre-approval. So I don't want you to feel overwhelmed or intimidated by the process, because it really is here's how much you can get approved for, or here's what you might need to work on so that you can get approved in the future, okay? It also is going to show you how much you're approved for instead of you taking guesses, right? The max purchase price calculator is good for us to get a general, ballpark idea of where we're at, but you actually want to know, what's the ceiling that you could qualify for, and what do those numbers look like with a really good estimate? So to start this, you can work with a loan officer on our team. All of our loan officers have the heart of a teacher. Their goal is to make sure that you feel confident during the process, and they're going to guide you through the best loan for you, make sure that you understand what all the monthly payments look like, what the upfront costs look like, and comparing those loans to make sure that you have the right choice. And so you can go to winthehouseyoulove.com/lender. Our team works in all states except for New York. So when you're ready to get started, you can go there. A pre-approval is free as well. So what we have are competitive rates, no surprise fees, and helpful loan officers to guide you through the process. So what you're going to learn from a pre-approval is you're going to learn the loan type that you qualify for, right? We talked about those 4 main loan types. Well, underneath those loans, there's tons of little, small little detail types of loans. For instance, conventional loans. There's a couple of different types of conventional loans. If you're under certain income limits in the area that you're looking to buy, sometimes you can qualify for a conventional loan that has a lower rate and lower mortgage insurance. For FHA loans, you might be able to qualify for down payment assistance. So tons of little features that we can help you figure out when you go through a pre-approval. You're also going to figure out what your maximum purchase price is, so that ceiling, and we're not recommending that you go to the ceiling, but it's helpful to know what are the bounds that you have when you're looking to purchase. You'll see what your interest rate is, your required down payment, the lender fees, and then also estimated monthly and upfront costs as well. And so our goal is to give you those accurately. Often what we see are there are a lot of lenders who underquote things because they want you to work with them. They'll underestimate property taxes, for instance. Well, your lender they don't charge property taxes, but their job is to try to estimate it accurately. And there are people who don't estimate them accurately. They might underestimate them to make it seem like working with them is going to be better, but no matter what lender you work with, those taxes are going to be the same. So our goal is to give you the most accurate estimate possible, so that you have the best information when you're moving forward with buying. So when you do get a pre-approval, you're going to need some documents, all right? And again, we see this Google Drive icon. What I want you to do is have that folder in your Google Drive, and I want you to put in these documents as you assemble them. That way they're all in one spot. So you have your home buying folder, especially if you're buying with somebody else. This is really nice to have, maybe 2 folders. It's for you and your partner. That way everything's organized in one spot and you have it ready to go when you need it. Okay, so for some documentation, what we first need to do is prove income here, all right? So really standard would be the past 30 days worth of pay stubs. Okay, if you're self-employed, that's okay. You don't have pay stubs, it's perfectly fine. Just if it doesn't apply to you, don't include it, all right? So past 30 days of pay stubs. Also, it's good to have 2 years of W-2s, 1099s, and your tax returns as well. So not all loan types are going to require all of this documentation. Sometimes, you might have a conventional loan that only requires 1 year of W-2s. Maybe you're self-employed and you don't have those pay stubs, so we just use tax returns. Often what we can do for a lot of people is they can either enter their bank account information, or we can use a software that pulls in their salary data where they don't have to provide any income documentation. But what I want you to do is just have this ready to go. That way you have it. So if a loan officer is like, hey, we need this document, you don't have to spend the time waiting to collect the document. You already have the document ready to go. The goal here, again, is to get you prepped so that when you find this house, you're ready to go. You're on it. You're ready to make this offer. You're ready to move. And you don't feel like, oh, there's a million things that we need to do. You're already prepped and ready. What we also need are usually 2 months of bank statements. So what we're seeing in the 2 months of bank statements is making sure that you have the money for the down payment and closing costs. Now, what a lot of people run into is they're like, hey, I'm still just in the planning stage. I want to see what that number would be, but I'm not quite ready. Maybe I'm buying in 6 months from now. That's perfectly fine. So in that situation, you don't need to have bank statements that show you have the money for the down payment and closing costs. Just talk to your loan officer, fill them in. Our loan officer's goal is to help guide you through this process. It's not a pass fail type of thing. And so if you don't have those bank statements ready, or they don't have the money in there yet because you're still working on saving that, or maybe you're getting a gift from a family member or something like that, that's perfectly fine. Just communicate that with your loan officer. They just want to know that you have a goal, that by the time that you're ready to buy this home, you're going to have the money for the down payment and closing costs. And then, of course, you're going to need some sort of identification. Most people use a driver's license for that. So it's best to go ahead and start collecting those things, put them into a folder. That way you have it ready when you are going through the next step. Okay, so the pre-approval process, this is first going to start with an online application. And this usually takes about 15 minutes to fill out. And it's really just some basic information about you, where you work, how much money you make, how much money you have saved. And then from there, what we'll do is a credit check. So we'll pull your credit. A lot of people get really freaked out about this. So we can do 2 things. We can either do a soft credit pull or a hard credit pull. So a soft credit pull is definitely possible, and we can take a look at preliminary numbers. A hard credit pull is going to be needed when you are under contract for a home to give you a really solid pre-approval there. Okay, so in that, a hard credit pull, which is what I would recommend, changes your score from 0 to 5 points. It's not going to tank your credit score. And you also have 45 days to get your credit pulled with different lenders. So if you're already working with a lender and you want to consider working with us too, we can do that as well. If you've worked with that lender within the past 45 days and they pulled your credit, then us pulling your credit won't impact your credit score. Okay, so the credit score is then going to tell us the credit score that we're going to use to qualify you for the different types of loans. From then, what you want to do is submit the documents that you've collected from that should be in your Google Drive. And basically what's happening here is loan officers have to match the documents with your application. So if you say you work at ABC Company, we need to see on your documents that you work at ABC Company. We're using the documents to verify the facts that are in your online application. From there, once you're under contract for a home, you'll be able to get a loan estimate. So if you're not under contract, if you're just in the home shopping phase, we'll be able to give you a quote that's going to show you your rate, your monthly payment, your upfront costs, down payment, things like that. If you're under contract for a home, then you will get a loan estimate. And so a loan estimate is a more formal document that shows you all of those things as well. It's just in a standardized form created by the government. So you can put that in your Google Drive as well. You'll also get a pre-approval letter to put in your Google Drive. Now, a pre-approval letter is important because sellers really want to see this when you put in an offer on a home. And most real estate agents aren't going to work with you unless you have a pre-approval letter. All a pre-approval letter does is it's a letter from your lender that says, hey, you are able to get a mortgage for this amount and you're able to buy a house. That way they know that you're a serious home shopper. You're someone who's a serious home buyer, that you actually are able to purchase a home. Otherwise, your real estate agent doesn't even know, okay, I'm going to spend all this time with you showing you homes. Maybe you want to write offers on a home, but can you actually get a mortgage? That's what the pre-approval letter helps everyone understand about you. So at this stage, there's some things that I want you to really be mindful of to not do, because this can mess up your pre-approval. And especially if you're under contract for a home, you absolutely do not want to do these things. So if anything on this list is something that you're like, hey, this is going to come up, or this is something that I might need to do, talk with your loan officer about it first. Clue them into it. Your loan officer is on your team. Okay. You're not working against them. They're not trying to work against you. You're working as a team together so that you can get to the finish line and close on the home. So I see people hide things from loan officers all the time, and then it's going to come out later. It's easier just to let them know up front. That way they can help you come up with a plan for it. So I don't want you to make any big purchases, no cars, furniture, new credit cards, things like that. Every once in a while, someone will get under contract for a home. The closing is supposed to happen in 5 days. What's going to end up happening is your underwriter is going to pull a soft credit pull to make sure that no new debt was opened. Sometimes what ends up happening is someone might buy $5,000 worth of furniture on a new credit card. Okay, well, now we need to make sure that that fits in your debt to income ratio and you can still get qualified for a mortgage. Or someone buys a new car or a boat or something like that. You don't want to make any big purchases without running it past your loan officer first. Also, don't quit or change jobs. Steady income is key in your pre-approval, and also making sure that you still qualify for the home while you're under contract. So don't make any changes to your job. If you're going to change anything with your job, do it after you buy the house. Just wait. I don't know why people, they make this big home buying decision and then they also want to change everything else in their life at the same time. It happens so much. Don't do it. If you're making any big changes, just wait till after you buy a house. If you can wait a month or two until you close and then do something, that's going to be the best strategy. Also, don't move any large sums of money. So any large deposits get questioned by lenders. It doesn't mean that you can't use that money, but it makes things more difficult. So if you're going to move money around, talk with your loan officer about it. Paying off debt or collections also without lender guidance is not suggested, especially things like collections. Sometimes paying off collections can actually decrease your credit score. I know it sounds counterintuitive, but don't do this unless you talk with your lender. Also, make sure that you're making payments on time. Okay, if you have any late payments, that really is going to drastically hurt your ability to keep that pre-approval. So make sure that you have those on-time payments. Okay, now let's talk about choosing the right real estate agent. So you're likely going to want to work with a real estate agent when you're buying a home. So often what happens is the seller customarily is going to pay for your real estate agent. Now, your different real estate agents might charge different things. They might have the seller pay it. They might have you sign a document that says if the seller doesn't pay it, you would be responsible. You want to talk with your loan or with your real estate agent about what their commission structure looks like to make sure that you're not going to run into any trouble in the future when you are buying. Okay, so that's just something to keep in mind. But for most people, you're going to run into a situation where the seller is going to pay your real estate agent out of the proceeds of the sale of the home. Not in all situations, but that's normally what you're going to run into. Now, what I want you to do is I want you to avoid dual agents. So a dual agent is when an agent represents both the seller and you, the buyer. In my opinion, I just don't know how you can do this without there being a conflict of interest. I know a lot of realtors push back on this. And frankly, realtors like this, in my opinion, because they make commission on both sides. And sure, they might reduce their commission a little bit. And I don't think it's all nefarious, but I just don't think that anyone if they're being 100% honest, can say that the real estate agent who's representing the seller can also honestly represent the buyer. I just don't think that that's possible. And so I wouldn't recommend doing that. So people run into this situation where you might find a home online, and often you're going to see the realtor's contact information. The realtor who is listing that home for the home seller, you're going to see their contact information. Often people call up that agent and they're like, hey, I want to take a look at this home. And that agent will be like, great. Are you working with a real estate agent? No, we're not working with a real estate agent. Okay, cool. I'll work with you. And then all of a sudden, the agent who's supposed to be representing your best interests is also representing the best interests of the seller. And I just, in my mind, don't feel like those two things work well. So you should be represented independently of the seller, in my opinion. So I would avoid dual agents. Also, I want you to test their fit. So explain your situation and see how they respond. A really great agent to work with is going to be someone who has the heart of a teacher, who's willing to explain things to you, who isn't going to brush you off, who's going to respond in a reasonable amount of time. You don't need someone who's like responding to you every single minute, but if they don't get back to you within, if they don't reply to you in a day or 2 or 3, okay, maybe this might not be the best agent for you. And really, I think with a lot of times when we're working with someone like a real estate agent, it's okay to trust your gut. I know I have this here at the bottom, but it's okay to trust your gut. And right, we're testing the fit here. Don't feel like you have to impress a real estate agent. Ultimately, is what I'm trying to say here is, don't feel like you have to show them we have this cool budget. We're looking at these really interesting homes. You don't have to make the realtor like you. I think people feel like this so much because I see where home buyers will lie to the real estate agent about how much they can qualify for, or how much money they make, or they can make this big down payment. They want to buy in this neighborhood. You don't have to impress your real estate agent. That's not their job, is to be impressed with you. Their job is to fully understand your situation. And so I want you to lay it out for them. Hey, this is where we're at. This is where we're looking to buy. This is why we're buying here. What do you think? Let them help guide you through that process. See how they respond. And that's going to be a good way to tell, okay, is this someone who's going to be good to work with or not good to work with? Also, I want you to look for someone who's helpful, not pushy. A good agent is going to guide you and not just sell you on a home. And this is something that you're going to be able to feel pretty easily. I think we all know what it feels like to be sold to versus someone who's going to guide you through. And really, that's why I keep mentioning the heart of a teacher. I think that's a really good indicator of a great professional to work with. And then also, experience isn't everything. A newer agent with dedication can be just as valuable, honestly. I know a lot of agents kind of, their reason for why you should work with them is, I've been doing this for 30 years. That doesn't really mean much, to be honest with you, because there are a lot of agents who've been doing it for 30 years and they may only sell a couple homes a year. And that doesn't mean that they're a bad agent. But if their only claim to fame is, I've been doing this for forever, doesn't really tell me if working with you is going to be good, right? Because there's also a lot of agents who may be super busy. And if you're in a really competitive, high-paced market and you need an agent who's going to be able to write you an offer in an hour or 2 hours, a really busy agent might not work for you. And sometimes a newer agent with dedication who's willing to learn, willing to listen, willing to find out information for you can be just as valuable. Because frankly, in the real estate world is so complex. I just don't believe that you need somebody who knows every single thing and has been doing it for forever. You really want someone who is willing to say, hey, I don't know, but I'm going to look that up and make sure that we come up with a good game plan. Really, you want someone who's there to listen, to help understand what you want, and also help you negotiate a good offer and walk you through homes and give their perspective as well. And then finally, I want you to trust your gut. If something feels off, keep looking. You don't have to keep working with a real estate agent. Now, something you do want to keep in mind is that there are agency agreements that you often are going to sign with a real estate agent that may be for a duration of time. So something I want you to be mindful of is making sure that agency agreement makes sense for you. So something like 30 to 90 days on an agency agreement is probably going to be an average that you're going to see, meaning that you're going to sign to work with that agent for that period of time. 90 days is probably going to be a more average that you're going to see across the nation. But I'd be careful of agents who are going to try to lock you into 6 months, for instance. If you have a 90-day agency agreement with your agent saying, hey, we're going to work with you for 90 days, or we're going to try this out for 90 days. And if things don't work, if things don't work out, you can always not renew that with them. Or if things do work out, you can always just keep renewing it. If it's a good agent, they're going to feel confident in saying, hey, if at the end of 90 days you haven't found the home and you want to re-sign this agreement, that's perfectly fine. So trust your gut there. Make sure you don't get locked into anything that's going to be too long-term where you can't back out. if you feel like things aren't working out. All right, so some places that you can find a real estate agent. Really, one of the great ways is to see, okay, did you have friends who bought a home recently? Ask them to say, hey, how was your agent to work with? Are they someone that you would recommend? You can also, of course, look on Google to find who has great reviews, interview a couple agents that way. Also, if you're interested in our agent finder service nationally, you can go to winthehouseyoulove.com/agent to look at an agent in your area as well. Now, shopping for homes, I have some do's and don'ts for you here. So do's, follow MLS updates. So your agent will have access to the multiple listing service. This is where all the homes are listed for sale. And they will send you new listings. It's usually going to be some sort of automated thing based on filters that you have. But the MLS is going to have the most up-to-date information. Home buying sites online that I like to use, Zillow, Redfin, Trulia, all those are going to get information from the MLS. The MLS is going to be the source of that information, the primary source. And so sometimes those other sources can be delayed a little bit or might not have as accurate information. They're usually pretty good, but in my opinion, if you're like down to the wire and you're like, I want to be the first one to see a new home get listed, especially if you're in a tough market, the MLS updates are going to be the best place because it's the primary source of information. So make sure you stay up to date on those. Talk with your agent about them. That way you can filter in on exactly what you're looking to buy. Because at this stage, when you're looking for homes, it's really the time that we need to kind of get rid of the Zillow, doom scroll. I know it's fun to go on somewhere like Zillow and find the dream home or the cool homes around you. But what you're really looking for at this stage is realistic. Your serious home buying mindset right now, where you have your budget locked down, you know exactly what kind of price range you're looking at. You really need to be looking at homes that fit your criteria really strictly and not homes that are just fun to look at. Stick to your budget as well, both your lender's max price and your personal comfort zone. So when you're doing that pre-approval, you can always ask your loan officer and say, okay, I know what I'm pre-approved up to, but I want to stick around a, let's say, $2,400 per month mortgage payment. What would that price range look like? And then talk with your real estate agent about that to say, okay, I want to stick around this purchase price, and then make sure that those MLS updates are tailored in that way. Also, use your why. Keep your goals in mind to set urgency or non-urgency if your why doesn't have any urgency to it, and the timeline as well. Communicate that with your real estate agent and your loan officer. Say, hey, this is why I'm buying. That way they can make sure that all the decisions that you're making, they can make sure that they're aligned with your goals, with your why there, and they're not letting you go a different direction that's not based in why you're looking to buy a home. Also, what you want to do at this stage is make a needs and wants list. You're going to start seeing more and more homes as you're shopping for them, maybe going to open houses. And so I think it's really good to start writing down, again, you can put this in your Google Drive on some sort of doc, just put down needs, wants. Needs are going to be things like, okay, well, your family's expanding, so you need 3 bedrooms. You have a dog who has a lot of energy. My need is I need a backyard where the dog can run around. A wants list is going to be a little bit more flexible. A want is going to be maybe it has a upstairs space I can have an office in. Okay, maybe that's not something that's a need, but it's more of a want. Maybe it includes a hot tub. Okay, make sure that those wants don't color too much of our decision when you find a home that meets all of your needs, but it doesn't have a couple of those wants. That's where we want to take a look at, okay, can we compromise on some of those things? Because separating them is going to allow you to make some better, more clear decisions than if they're all just kind of grouped together into this ambiguous thing. Especially if you're buying a home with somebody else, it's really good to get on the same page of what do you need versus what do you want? Because if you're not on the same page and that's not clear, like on paper with each other, you're trying to communicate, well, I want this thing, but you need that thing, and you're willing to compromise on this, but I'm not willing to compromise on this. And doing that while you're in the midst of home shopping is really stressful. Separate that out. Spend an hour to list those down if you need it, to talk through them. That way you have more clear decisions to be made when you're shopping for a home. Some don'ts. Don't get emotionally attached too soon. Right now at this stage, it's just a house. I know that you might be walking through a home and you're trying to plan, this is where I'd put the couch and this is where we could paint the nursery over here. But at this point, it's just a house. It is not a home. I want you to stay objective until it is the right fit and you're under contract on that home. So many people, they walk into a home and they're like, I love it. This is what I've been dreaming of. you didn't know that that home existed until 5 minutes ago, right? It couldn't have been that big of a hole in your life. You didn't even know it existed, okay? Don't get emotionally attached too soon, because it's really going to put you in a situation where you're going to feel like you're going to bid more on the home than you're comfortable with and might stretch your budget. Or it just makes the whole process feel really disappointing, because if someone comes in with a higher offer and you're like, we just can't do that, then it feels like rejection over and over again. It's just a house at this point. It's not a home yet. It's not the home until you move in. So don't get emotionally attached too soon. Try to plan logistically. The goal with all this planning is to make sure that you can make more clear decisions and you're not led by the emotion of everything else, because the emotions are great. We want to make a house a home, but when we're shopping for a house, we don't want those emotions to be too much in there. They can really cloud the logistical decision making that we're trying to have in this moment. Also, don't feel like you have to see every single home. You want to be selective and trust the process. Again, when you're looking at those MLS filters with your agent to see, okay, well, I want a home with 3 beds, 2 baths, this price range, this much square footage, you don't have to see every single home that gets listed, especially as you start refining more and more of your needs and your wants. Just start to say, this is exactly what we're looking for, and we don't need to spend our energy looking at all of these other things, because that's when we start kind of getting in that emotional loop of, well, maybe we bump our budget up $30,000 more and we get to have this price range. And all of a sudden we start really creeping up and moving away from our why. We start moving away from our budget, and things become a little bit more difficult and more frustrating and overwhelming at that point. Also, make sure that you don't move too fast or too slow. So what you want to do is talk with your agent. Hey, what is this market like? What's the kind of pace that we need to be looking at? Because sometimes people will jump into a hot market and they're like, hey, we're not ready to move that fast. And then they're like, wait, why can't I have a house here? Or the opposite. Maybe that market has a little bit of a slower pace and you're feeling like, I have to go quickly here. When in reality, you might have been able to maybe offer a lower price on the home or get some seller credits out of it, or you maybe have a better negotiation position there. So talk with your agent about that. Hey, what's this market like? How would you expect the speed of this to work so that we can actually buy a house in this market? And really what I want you to do is I want you to have all this preparation so that when you find the house, you're absolutely ready to make an offer on it. You're ready to have a confident decision rather than saying, oh, we need to get all this stuff put in place. I don't know what my budget's like. I don't know what the down payment's going to be like. You're able to get prepared, and then you're able to kind of sit back and wait and see, okay, I'm waiting. I'm prepped. I know exactly what the right decision looks like. I know exactly what the right home looks like. I'm just waiting for it to come up. As soon as it comes up, then is when I can make my decision. So when you find a home that you love, you're ready to write an offer. And so you're going to work with your real estate agent to write an offer. And so an offer is just a contract you submit to the seller, and the seller can either accept that or counter it or reject it. And basically what you're trying to do is on this document, on this piece of paper, you're trying to say, hey, we're going to offer this much for the home. Is that something that would work for you? Or they can counter it with something that would work for them. Okay, so the negotiation stage here, it's more than just the price. So you can negotiate terms, closing costs, repairs, tons of different things about the purchase of this home other than just the price. Okay, so you could say, hey, the home is listed for $300,000. We'll actually offer you $303,000, but we want $3,000 back in closing cost credit to help pay that down. Or maybe we want a home warranty included with that as well. If you're in a competitive market, you might say, hey, we've been fully pre-approved by our lender, fully underwritten with them, and we want to be able to close this home in, let's say, 20 days. So we'll do that to try to be more of an enticing offer than maybe some of the other home buyers who might be offering on that same home as well. Okay, so you're going to submit that offer with your real estate agent. So you want to make sure you read through that contract and understand everything that you're offering there. And the seller, they can either accept, and so the contract then would become binding. You'd be under contract and ready to move forward through the home buying process. So another option here is they can counter. So, the home might be listed for $300,000. You might say, hey, we'll offer $290,000, and they counter back and say, we will do $295,000. And so you can agree or walk away. And, it's just this back and forth at this process. And it's only going to be a binding offer when you accept and they accept as well. and your real estate agent will walk you through that process. So once that's accepted, the contract is going to be the guide to everything that's going to happen in the closing. So the contract is going to list out, okay, you're probably going to have an earnest money deposit, meaning it's kind of like you're putting up like a good faith offer on the home, on the contract. So you have a little bit of skin in the game. So sometimes that might be $1,000. And that basically is just like, hey, if we don't follow through on our end of the contract, the seller gets to keep that $1,000. So it's going to tell you the timeline for the earnest money. It's going to tell you the timeline for when you need to have a conditional approval from a lender, when the appraisal is going to happen, when you have time for a home inspection. Everything in the closing is going to be outlined here in that contract. It's going to be the map for the closing process and have all those dates and timelines with it. Now, some tips here to make a strong offer is you really want to make your offer stand out. Work with your agent to make a winning strategy. And so really what I want you to be mindful of here is so often I see people like, this is the perfect home. This is my dream home. It has everything we want. We've been searching for months and we finally found this and nothing's ever going to come close. And we're also going to lowball the seller by $50,000. How do those match? Make your offer stand out. If this is a home that you want to win and you're in a hot market and other home buyers are competing for this home, make your offer stand out. Talk with your agent. Even if you don't have flexibility on the price that you can offer, there's other things that you can do to make your offer stand out. You can shorten the inspection period. You can say, add in addendums saying that we're not going to ask for repairs over, let's say, $5,000 that come up from the inspection report. We're going to shorten our escrow period. There's so many things you can do to make that offer stand out a little bit more than the other offers. If you really like the house, make your offer stand out. Ask your agent for advice. They're going to know what works best in your market. Don't feel like you have to be the market expert. Hey, what do you think I need to do to make my offer stand out for this house? And let your agent help you there. Be careful with offer letters. Offer letters aren't so much a thing anymore. But what used to be pretty common is buyers might like type out a document saying, hey, we really love your house and this is why it's going to work well for us. But there's some issues with fair housing that can come up with that. And then also, some sellers like them, but they often just create more legal risk. And so I'd recommend staying away from them at this point. And then have your lender call the listing agent. And so this can really just help reassure the agent and the seller that you're a solid buyer. So when they're looking at your offer, they're like, okay, we know this is someone who's serious about buying this home. Their lender called us and even vouched for their ability to buy this home. And so that can be really helpful at that stage. Now, when you're under contract, your loan officer is going to give you a loan estimate. So after your offer is accepted, you'll get a loan estimate within 3 days, okay? The loan estimate is going to break down your loan amount, your interest rate, the monthly mortgage payment, closing costs, cash needed at closing, and estimated taxes and insurance for this property as well. So the loan estimate is different than a quote that you get at pre-approval because a loan estimate is going to be tailored to the specific home that you're buying. And so it should more accurately estimate the taxes for that home, the estimated insurance for that home. Even though you're going to shop for your own homeowner's insurance, the loan officer is going to try to estimate what that's going to be around, okay? Now, review carefully and ask your lender about anything that's unclear. Often these documents can feel really overwhelming, and so it's all you have to do. Reach out to your loan officer and say, hey, I don't know what's going on in this document. Can you just help me understand what's my rate? Show me where my payment is. Show me what's in my payment. What are the closing costs? Walk me through that. That way you feel really confident about what's on your loan estimate. Okay, so next you're going to get a home inspection. So your contract's going to detail a window of time, your inspection period, for when you're going to be able to get that home inspection. Sometimes this is 7 days, it might be 14 days even, but it basically just gives you time to hire a licensed home inspector to come out and examine the home for any potential issues. So if you're like me, I'm not super well versed in home maintenance and stuff. The goal of a home inspector is to come out and show you, okay, here's all the things in which your home might end up costing you money in the future. So here might be issues with plumbing or electrical or maybe HVAC, your roof. It's going to give you estimates for the repairs on your home to make sure that when you're buying this house, you're not going to buy a money pit. You're not buying a home that as soon as you buy it, within the next year, you're going to be spending tens of thousands of dollars in repairs. And so what will happen is you'll receive a detailed report from your inspector outlining any concerns that they have about that home, and you can put that into your Google Drive as well. So your contract will determine if and when you can negotiate repairs with the seller. What's common for most contracts is you have this inspection, the report's going to come back, and from there you can negotiate with the seller on some of those things. So maybe some of the repairs might be, okay, there's an issue with the HVAC system, and maybe the seller, either you negotiate for them to fix that before closing, or maybe they give you a credit to help you repair that after closing. So that's absolutely something that can work. Now, some people, to try to make their offer stand out, will waive their home inspection rights. So they waive that home inspection contingency. Don't do that. I really don't think you should do that unless you are a home inspector or you're super well versed in home maintenance and you know what to look for. I really don't recommend that you do that. It can put you in a lot of hot water, especially if you don't know what's going on and you don't know how much things are going to cost. The home inspection is there to protect you during the process to, again, make sure you're not buying a money pit. Why it matters is this is going to help you spot hidden issues before closing. It's going to give you leverage to request repairs or credits if things come up in the home inspection. And ultimately, it's providing you peace of mind about your investment in purchasing this home. You're about to put a ton of money down for the down payment and closing costs and put in all this work. Move to somewhere new. You don't want there to be a bunch of issues. You don't want there to be huge termite issues and damage or mold or electrical issues or things that are going to cost you thousands of dollars after you buy this house. So next is the underwriting process. So what happens here is a lender is going to take your pre-approval and they're going to work that into a full finalized approval. So basically what they're doing is they're just going to run through your application again. They might ask for a couple updated documents. So maybe updated pay stubs, updated bank statements, and they're going to run your application through an underwriting software to make sure that everything is buttoned up and finally approved. And so at this stage, what's often going to happen is you'll likely hear from your loan officer and they might say, hey, we have a conditional approval. What that means is the underwriter looked at everything, they gave it a thumbs up, and they might just need a few extra things, again, like some updated documents, again, updated pay stub, updated bank statement, super common. Maybe they need your finalized homeowner's insurance, things like that, perfectly normal. And so what the underwriter does is they're assessing risk by verifying your income, assets, credit, and property details. And so you'll communicate with your loan officer or a loan processor during this stage who's going to guide you through making sure that everything is up to date. The underwriter is just making sure that everything is buttoned up for that final approval. So again, everyone is going to receive that conditional approval before that full approval, and the underwriter may request additional documents. And this is completely normal. I know it's kind of confusing in the mortgage world that there's like multiple levels of approvals. You know, you had the pre-approval where the loan officer is making sure everything is good to go. The conditional approval is the underwriter is making sure everything is good to go. Then after everything is done, then you have that final approval, which is called a clear close. I know it can be kind of confusing. There's those different approvals through the process. But just if you have any questions, talk to your loan officer. Hey, is this normal? Can you let me know what to expect? What kind of timelines are happening here? And they're going to be happy to walk you through what's going on. So what you'll want to do as well is you want to get homeowners insurance. So you're the one who gets to shop for homeowners insurance. And this needs to be there to cover fire, natural disasters, etc. for your home. So you get to shop around for the best policy. And that payment for your homeowners insurance is most of the time going to be included in your monthly mortgage payment. Now, what you can do in some situations, often if you're putting 20% down on a conventional loan, you can have that escrow account waived, meaning that you'll pay for insurance on your own outside of the mortgage payment. It's really up to you. A lot of people prefer to have it included in escrow. That way it's just managed. They don't have to worry about paying homeowners insurance. It's just included in that one mortgage payment for them. So it's going to be included in the mortgage payment most of the time, but it's also going to be included in closing costs because a full year, so 12 months of coverage has to be paid up front. So when you're buying that home, basically what's happening is you have to pay the first full year of homeowners insurance. That's included in your closing costs. And then you're also going to be paying monthly because you have that full year paid. So as soon as the full year comes due, well, where is the money for the next year? Well, you've been saving monthly installments through the mortgage payment. That way, when the bill comes due for next year, it's already set aside in that escrow account that the lender has for you, and they're going to make that payment for you. Okay, next what's going to happen is there's going to be a home appraisal. And so what's going to happen is your lender is going to send out an appraiser, and the appraiser is ordered by the lender to ensure that the home is worth the amount that you're paying for that home. So again, if you're buying you put in an offer to buy a $300,000 home, they want to make sure that the home isn't actually worth $100,000 because that just won't work for you to be able to get a loan on that. So ideally, the appraised value will meet or exceed the purchase price. So the goal is for the appraiser to come out to the home. They're going to inspect the condition of the home. They're also going to look at comparable homes, so homes that meet similar square footage, same bed, same baths, and they're going to try to see, okay, does this home realistically meet the value that you submitted the offer for? And so we want that to be at that price. So if you put in an offer for $300,000, we want the appraised value to come back at $300,000 or higher. If it comes in lower, what's going to happen is the lender's going to use the lower of the purchase price or the appraised value to determine financing. So if the value comes in lower, really what's going to end up happening is either the seller has to come down in the purchase price, you have to bring more cash to cover the difference, or you guys meet somewhere in the middle there, okay? So the appraisal is going to be sent to you, and I think that's good to also put into your Google Drive. Okay, so next at this stage, after you've sent in any updated documents, the appraisal will come back, the home inspection is back. One little note here is that the inspection is not related to your mortgage at all. That's just something that you have separately and doesn't get sent to the lender. But after everything's wrapped up and ready to go, you should have that final approval, and that's called a clear to close. And that means everything is finalized, and from here, you just need to review final numbers and schedule closing. So you'll receive what's called a closing disclosure. Unfortunately, it's basically like a loan estimate. It just has a different name and a slightly different format. Again, I wish things were a little bit easier in the real estate world, but this is what the government has decided is the best process. So the closing disclosure is a document you're going to receive at least 3 days before your closing. And I want you to review that carefully. Put it into your Google Drive. If you have questions, ask your loan officer about it. But that closing disclosure will have the final numbers for what everything is going to be in that purchase. Because again, the loan estimate was an estimate, right? They didn't know what your homeowner's insurance was exactly at that point. Maybe taxes are going to be slightly different. So that's just an estimate at that point. The closing disclosure should be more accurate. And usually, in my experience, is going to be even less than what the loan estimate was predicting. Most loan officers are going to try to pad the loan estimate to be a little bit more, just to give a little bit of wiggle room. And then the closing disclosure, those more accurate figures should be less in most situations. So that's going to give you the final numbers for what you're going to pay for that closing, for your down payment, closing costs. And then you'll also get instructions on how and where to send your funds for closing. So you'll be able to work with your real estate agent and title company to organize the closing, when the date and time is going to be, where you're going to have it. And then also you have to send in the funds for your down payment and closing costs, and you send those to the title company. Often that's through a wire. And so you'll get instructions on how to wire those funds over for your closing to be ready. You don't just bring cash or a credit card or a check. It's usually wired from your bank account to the title company's bank account. Now, before your closing, you're going to have a final review. There's a couple steps here. One thing you want to do is a final walkthrough. So this is usually 24 hours before closing to check for the home's condition. And this is just to make sure that, if the seller said they're going to move out, that they've moved out, or to make sure nothing has happened in between when you were last in the home and right before you're about to purchase it. Also, you want to compare your closing disclosure to your loan estimate. Since you have those, or you should have those in the Google Drive, you can be able to pull those up quickly and just pull them up side by side. Maybe you talk with your loan officer too and say, hey, if there's anything different here, can you just help me understand what changed? You want to make sure that those costs match your expectations for closing. And then the final steps here is the closing appointment is scheduled. This is where you're going to sign all of the final documents. You've wired over your money, and you're going to be able to finally purchase that home. This is the final stage here where the home is yours. And then also you want to review everything carefully. Ask any last minute questions if you need, okay? Don't feel like you just have to sign through a bunch of documents. You're welcome to read through it. You can also read through all those documents before closing. So if you're like, hey, I'm someone who has to read through every single document, just know that document package that you're going to sign at closing is going to be upwards of 100, maybe even more pages. And so you can always read through those documents before closing. That way, when you get there, you're familiar with what each of these documents is saying and what you're signing there. You're going to receive copies of all of your signed documents. Put those into that Google Drive. That's going to be really helpful if you ever need to reference that in the future. And then when you get the keys and when you can move in are going to be based on your contract. So it's actually something negotiated in the very beginning. Sometimes what ends up happening is you might have your closing today, but what was agreed on in the contract when you went under contract was that the seller might have a week to move out after you close on the home. That's perfectly normal. And so you might technically own the home, but you won't be able to move in and get the keys for 7 days, for instance. So if you close on your home on January 1st, January doesn't count. We actually would skip February, and your first payment wouldn't be due until March 1st. So you almost are skipping 2 months because you have to skip one full calendar month. Now, if you were closing, let's say January 30th, then we skip February and your first payment is due March 1st. So it's a little bit weird how that first payment works, but it's something to be mindful of. If you have a fixed rate loan, your principal and interest won't change during the entire life of the loan. So if you get a 30-year fixed loan at, let's say, 6% interest, it's always going to be 6% interest. Your principal and interest payment is never going to change. If you have an adjustable rate mortgage, those can change. But if you have a fixed rate, which is what most people have, those won't change. However, property taxes and insurance might adjust over time because even though they're included in your mortgage payment, they aren't your mortgage. You don't have a loan on your taxes and insurance. So if your insurance changes, that's something you need to talk to your homeowner's insurance rep about. And maybe you need to shop for different insurance if it goes up too much. Property taxes are also things that is going to be controlled by your county. And so that might be something where you get the county involved, and maybe there's deductions that you can find, or maybe you can test the value of your home to reduce property taxes. So you want to monitor your escrow account to make sure that everything is in check there. So if you're ready to get started with that pre-approval, you can go to winthehouseyoulove.com. Our team works in all states except for New York, and all of our loan officers have the heart of a teacher. We would love to help you get started on this next stage so you can see how much you can get approved for, what the monthly payment would be, closing costs, the best loan for you. And so again, winthehouseyoulove.com, and you can click Get Pre-Qualified to get connected with a loan officer on our team.